Good day, ladies and gentlemen. A warm welcome to another technical summary video presented by me, Letty Janse van Vuren. Our topic for today is the solar tax incentive for businesses. What I thought of doing when I got onto this topic is I took everything since February, since it's been announced in the budget speech, and I looked at the latest draft bills that were issued by SARS, by National Treasury. I looked at the draft memorandum with the explanations, and I looked at all sorts of articles around this topic. So what I've managed to do in today's session is literally to get everything, all the information out into a quick 15-minute power summary. So let's move. I'm going to start off with why is this important, what the relevance is of it. Then, as in part of the introduction, I will also be referring to the existing incentive for businesses. And then we'll go into an overview and a summary of the most important points on the new expanded incentive. And then I'll get to a conclusion. All right, so the abbreviations that I used on today's slides, not that many. SARS, as you know, NT for National Treasury, and the most important one, PV, is photovoltaic. Those are the solar PV panels that they refer to. All right, so why is this so important? Well, we know that the Income Tax Act is a piece of legislation that your clients have to comply with. If they don't, there's no CLAL obligations on your side, meaning non-compliance with laws and regulations. And you also need to be aware of all the changes that have come through to tax legislation, as well as the proposed ones, like this one that's been fast-tracked. So in your own capacity as a taxpayer, you might also want to comply with the Tax Act in your workplace, and you might even want to use the expanded renewable energy incentive over the next 2 years, and then also advise your clients accordingly. So it's important that you polish your knowledge on this topic very importantly. All right, the relevance to your clients, same thing. They have to comply with the Income Tax Act, and they might want to use this incentive in their businesses. Right, so let's go and have a look. Part of the introduction in the budget speech this year, because of the improved revenue collection, the minister then provided tax relief in excess of 20 billion rand to both individuals and companies. It looks actually more like 9 million than 20 billion. If I went to go and read through the relevant documents on the budget support scheme later on, looks more like 9 million, but nonetheless, money is available from the budget side. So that's why they've now tried to incentivize this. And the reason why they do this is to encourage more private investment to alleviate the energy crisis. Because we know we're in an energy crisis. I mean, we experience load shedding on a daily basis, and it is part of our lives. So at the moment, this for businesses means that there's a brand new proposed Section 12BA in the Income Tax Act. And then it also affects Section 12E for small business corporations. So if you are a small business corporation and you've claimed Section 12E in the past, well, then you will now, and you decide to move on to 12BA, you can claim one or the other. But in a nutshell, for businesses or companies, this expansion on the incentive, it's an expansion of a renewable energy tax incentive. And for individuals, we talked about the installation of solar PV panels. So that is a separate TSV that I recorded. You can go and have a look at that one. Today we'll only be focusing on the businesses one. Right. So yes, this is only available for businesses, and it's temporarily been expanded. So there was an existing incentive, but it's been temporarily expanded to encourage the private investment. So let's go and have a look at the existing incentive. Currently, the incentive allows businesses to deduct the costs of qualifying investments over either a 1-year or a 3-year period. Now, all that does is it creates a cash flow benefit in the early years of the project. In terms of Section 12B, 12B says that you can deduct 50% of the costs in the first year, so that's your 50-30-20 rule. 50% of the costs in the first year, 30% in the second, and 20% in the third year. That's what you are able to deduct, right, from your income. And this is only for qualifying investments. And this is very important because it's only for qualifying investments, and the same applies for Section 12BA. So if you are investing in wind power, concentrated solar, hydropower if it's below 30 megawatts, biomass meaning organic waste, landfill gas or plant material, and then photovoltaic PV projects above 1 megawatt. That's what section 12B says. Then there's also, in addition to that, if you invest in PV projects below 1 megawatt, you are then able to deduct the full 100% of the cost in the first year. So this is as it currently stands, right? So it's the 50, 30, 20 over 3 years that you can deduct the full cost of your investment into those certain qualifying assets or investments, qualifying investments in the projects. So if it's below 1 megawatt, then you can claim the full 100% now. What is the newly expanded incentive all about? Well, from the 1st of March, they're backdating it to the 1st of March. Businesses now qualify for 125% tax deduction on your qualifying investments. So we're still talking about the same investments that we talked about here: wind, concentrated solar, hydropower, biomass, and photovoltaic. Very important. And this is over for a 2-year window period, and that's as part of the expansion of the existing Section 12B. So for the next 2 years, we will have Section 12BA, and businesses are then able to claim the 125. There's no thresholds on generation capacity. So it doesn't matter. It doesn't matter how much you actually can generate. Hydropower below 30 megawatts, it doesn't matter. PV projects, if it's above or below, it doesn't matter. You can claim 125%. There's no threshold on the generation capacity. Right. And it's available for 2 years. Obviously, it does no thresholds on the size of the projects that qualify. And remember, the projects that qualify are the ones on the previous slide. This adjusted incentive will be available for investments that are brought into use for the first time between the 1st of March 2023 and 28 February 2025. So that's the 2-year period now. What happens now when we're looking at existing ones where the previous year we claimed Section 12B? That doesn't mean that you can now all of a sudden claim 12BA, because it's only available if you brought the asset or the investments into use for the first time in the 2-year window period. So this then led me to go and look at the most important points. How this differs from the one to taxpayers as well. This is available to all taxpayers. It's not only limited to natural persons, not limited to businesses only. It says including but not limited to natural persons. As long as the qualifying assets are brought into use for trading purposes. So if you have an individual who's a natural taxpayer and they are bringing this into use for trading purposes, then obviously that will also be available to them, this 12BA. It takes the form of a deduction against income, so it reduces your taxable income rather than the tax, where the individual rebate is a rebate against the tax. This reduces your taxable income. It's not limited to the cost of solar panels like the individual incentive is, or even to solar energy. Remember, it applies to all the qualifying machinery, plants, implements, utensils, articles, whatever in the renewable energy, if it's in the form of wind power, PV, concentrated solar, hydropower, or biomass. Right, and that's regardless of the energy generation capacity. This is not subject to a cap, like the individual one is up to a maximum of 15,000. There's no cap on this. But the cost cannot exceed an arm's length third party cost. So already you can see people trying to get creative and have these arm's length third parties, right? Or have these third party transactions with their related parties and then inflate the cost so that they can then inflate their deduction, their 125% deduction. So that it will be capped if we are talking about third parties, right? So it will be capped at the cost of an arm's length cost. The allowance is available to lessors in limited circumstances. So you'll have to have a look at that section there. And then the energy tax incentive is calculated at 125% of the cost of the energy producing assets. And it's available in full in the tax year when the cost is actually incurred. Right. So remember that it's got to be brought into use for the first time. And that then brings us to some of a few of what I like to call few point-worthy aspects. It's implied in here that this allowance, this energy, this enhanced one, is only available to owners. So if you purchased anything, your qualifying machinery, plant, whatever, in terms of an installment credit agreement, that would be fine because the ownership passes to you. But for some reason, if the ownership is retained by the taxpayer as a seller, so if it's retained by the seller and doesn't go over to the one who purchases it, well, then there will be no allowance available to the owner or to the buyer, the purchaser. This is available to all owners or purchasers under installment credit agreements, it also looks at installment credit agreements. So I don't know why it implies, but it's not clear that an owner, if they purchase this in terms of a cash sale, they don't qualify for the enhanced allowance. I was hoping that the explanatory memorandum was published. When it was published, it would actually look at the reasons why. But I think this is just a drafting oversight. I think they meant to say if you purchase it by way of a cash sale or installment credit agreement. Right. It's just with a lease agreement where the ownership passes at the end of the period. You are not the owner for now, so you cannot claim the deduction. Oh, there's an interesting link to an article that I left for you at the bottom. If you want to go and read up on that, it's quite an interesting one that's just nice to read. I then went into the explanatory memorandum and what did I come up with? Well, like I said, if in the previous years the normal 12B has already been granted on those energy producing assets, well then 12B8 is not available in this year. All right. But once again, the draft legislation doesn't specify that that 12B8 trumps the 12B. So it appears at this moment like the taxpayer can, if there's whatever, claim the normal 12B, the normal renewable energy allowance, even if the enhanced allowance would have been available. So the client or the taxpayer needs to be up to speed to see what they actually want to go and achieve and what they want to claim, 12B or 12BA, but then we know that they can't claim both. In the same breath, Section 12E for small business corporations, they will not be able to deduct in terms of 12E if they've already taken the incentive that's granted in terms of 12BA. So it's either or. It's either 12B or 12E or 12BA. Right. So normal ones, small business corporations, 12E or BA. Normal businesses, not small business, either 12B or BA. If the taxpayer then sells the asset on or before the 1st of March 2026, in respect of where he's already received this enhanced energy incentive, well then 25% of the amount that is recovered or recouped will then be included in his income. This is over and above the amounts in terms of the normal recoupment section 84A of the Income Tax Act, right? So this is just if the enhanced 12BA was claimed and he then sells it on or before the 1st of March 2026, it's then included, right? So in summary, let's go and have a look at this. Companies will need to be informed on the finer details of this tax incentive. They are the ones that need to distinguish between what their needs are, what their assets are. So they'll have to separate which ones comply with 12B, which ones are in terms of 12BA, and which ones are in terms of 12E. And they'll make the decision then, okay, that for these ones, we are going forth with 12B because we claimed it last year. We've already claimed the 50, so for this year we'll claim the 30, and next year the 20 on the 12B assets. On the new assets that we bought via an installment credit agreement in this year, or up until Feb 2025, we will then be looking at whether or not we can claim that in terms of 12BA. Right. When is this effective? Well, it's already effective now. It is from the 1st of March 2023. I think when they announced this in the budget speech, the mere fact that they had a frequently asked questions document ready almost in the same day, the very next day they published a frequently asked questions document on individuals. And that said to me that, they've been working on this for a while. But it has now been fast-tracked. They've already released the first batch of the 2023 Draft Taxation Laws Amendment Bill in April, and it only relates to these energy incentives. Right. So on the 12th of April, public comment was due already on the 15th of May. Doesn't look like we've seen anything come forth from this. So we wait with bated breath, but I don't think anything's going to change. They will incentivize this in some way, shape, or form. I'm just worried about where they are claiming it now, and then later on there's some finer detail that says, oh, there's a recoupment now above what we know now. So that's the only thing I'm worried about. But I think it's good that the incentive is there. Um, yeah, and companies will need to be in charge of what they want to claim for. All right. So if you have any more questions at this stage, or if you need more detail, there's my knowledge is power slide. Remember that we've got the technical alerts that are published daily. I do those on a daily basis, and it gets posted on LinkedIn, also on the Accounting Academy website under news. Please make sure that you follow SA Accounting Academy and not me on there. There's our YouTube channel, which you can also benefit from, all the videos and stuff. The technical summary videos like this one that I do now. All the TSVs, I do 8 every month. So there's a lot of small topics. And it's really power summaries on important topics that we are dealing with. Webinars on demand is where I've, for instance, done a live webinar for 2 hours, and it gets recorded, and you can then work through that in your own time. And then last but not least, we've got my other baby, the MCLU subscription, which is then the monthly compliance and legislation update, right, which is on all the latest changes. Right, so from my side, ladies and gentlemen, thank you very much for your time. I hope you enjoyed this short technical summary, but a powerful one on the solar tax incentive for businesses. Thank you and goodbye.